Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Chicago wheat. In late May, the recent market peaked at the January 2022 low at 73.39. Turning lower and not really stopping until the dark blue highlighted neckline of the February to April reverse head and shoulders pattern, which is currently at 571. Since then, we've seen a slowing down, not a complete stop, but a very strong slowing down. The congestion from mid-February to late April impacted on the market's decline, and we have formed a small bear channel since late June, highlighted in bright red on my daily chart. That's currently 521 to 564. Additionally, I believe that one should not look at this bear channel in isolation. Instead, look at it as part of the V-top, becoming a V-top with an extension, formed since late June. So what can we tell from such a pattern? Well, usually such V-top patterns with extensions are small, much like the size of the earlier small descending triangle during early to middle June, and usually pennants or bear flags. Not so in this case, but it does not take away from the idea to have such a larger pattern attached to the V-top. Thus, I would look for the bear channel lines to show some of the immediate support and resistance which we have seen throughout July. The pressure in such a pattern will tend to be for lower prices, and I can see immediately that earlier this week the market pierced the March 2024 low at 523 and the important 38.2% absolute Fibonacci line at 521. But we've since recovered, though for the moment we are still under last week's high. Yeah, we are still under last week's high. I also now note the incoming pressure from above of the green short medium moving average. That's currently at 563. That is now edging below the bright red upper bear channel line. I'll be interested to see its impact on the market when it reaches it, as I have said for a couple of weeks now, that I personally would even start considering looking below at the 2016 to date uptrend, currently at 480, and even the 2005 to date uptrend, currently at 451. But these are not targets, not yet, just thoughts for another day. I also note the historical support seen in the 495 to 500 zone below. Chicago corn. The extension to the lower trend line, currently at 466 of the July 23 to January 2024 descending triangle, as well as the long moving average, currently at 445, capped the market throughout May, leading to a small double top pattern. Prices then headed lower, below all the moving averages in mid-June, accelerating the fall once past the hurdle of November 2020 high of 439. Prices finally halted between the November 2020 low at 403 and the October 2020 low at 387. Creating a teeny triple bottom and recovering all the way up to the highs 5 weeks ago, the 50% absolute Fibonacci line at 425. In the process of pulling back up, the market made a small July-based ascending wedge pattern. Late 5 weeks ago, prices penetrated the lower trend line and soon after exited the pattern. The market easily reached the primary target, but it took until mid-August to drop down and reach the secondary harder to reach target. 2 weeks ago, I added a thought, and that was to look at the mid-June to late August action as possibly a descending triangle. There were arguments against this idea, but I did find it elegant at the time, and as I said back then, and I quote, "We seemingly run out of time and space at the end of next week." So that's the end of last week. So I would be able to give perhaps a better appraisal in my next commentary, end of quote. Well, my appraisal last week was that the prices exited out of the upper trend line of this descending triangle idea, highlighted in dark blue on my daily chart. Instead of heading higher, they have headed lower, down towards the flat lower trend line, currently at 390. Now, this could well have been a false break higher that we saw, and the market actually means to turn low, and I can grant you that. But it also means two things. Firstly, that we also have a shallower and smaller descending triangle from late July to date, with the upper trend line highlighted in bright red on my daily chart, and that's currently at 396. And that secondly, in such descending triangle patterns, you sometimes have false breaks in both directions before the market settles down to its true journey. This week's actions reinforces these two ideas, as we have seen what appears this week to have been a false break lower after the false break higher I'd spoken about earlier, before a resumption of its true direction, a break higher apparently today, over the bright red upper trend line. It will all depend on the close tonight. Another feature which will depend on tonight's close is the possibility of a weekly key reversal this week. It is not as yet set. Now, when I wrote this as my script, the high I was looking for was 401, and we are actually over 401.5, so it is now set. We are set to make possibly a weekly key reversal this week, and I'll deal with that in a little while. Finally, we have the purple highlighted late May to date downtrend, currently at 406, entering the frame, with its adjacent reinforcement of the green short medium moving average just above, currently at 408. So these are two more to watch. What is certain over all of this is the flat congestion line at 390 and the dark blue flat lower trend line, currently at also 390, are the base for all of these. So many levels topside to watch. It's worth only watching the one level on the downside. Now, going back to that weekly key reversal, if we close tonight over 400.5, and at the moment we are at 401 and 3/4, actually don't even need to close over, we're over that level, but we need to close over, say, 393, which we should be able to do, then we will have a weekly key reversal up in this market. Kansas City wheat. During February through to April, we saw the development of a rectangle pattern based on the 551 to 590 area. Now, please remember this area, especially the lower level, as we become relevant again to the more recent action. Anyway, after the creation of the V-top in late May, prices rapidly descended down to the extension to the dark blue lower trend line, currently at 581, of the late November 2023 to end of March 2024 descending triangle, along with the important July 2021 low at 578 and the March 21 low at 559, and back into that previously mentioned rectangle pattern area between 551 to 590. Since then, prices have moved sideways to lower, all the time making a new shallower bear channel, highlighted in bright red on my daily chart. That's currently 535 to 581. This pattern construction is the familiar V-top with an extension, as we have seen in other grain markets. As I said elsewhere, I believe that one should not look at this extension in isolation. Instead, look at it as part of a derivation of the V-top. So, what can we tell from such a pattern? Well, usually such patterns are small and are pennants or bear flags, but not so in this case. However, it does not take away anything from the V-top, having such a larger pattern. Thus, I would look for the bright red bear channel to continue showing the immediate support and resistance levels. The pressure in any such pattern would be for lower prices, and I can see immediately that prices last week punched down through and closed below the important 551 support. However, the move down was not sustained, and prices reverted back up, moving up from the significant support of the important 38.2% absolute Fibonacci line at 533. Personally, I would even start considering looking below at the unreconstructed December 1999 to date uptrend, currently at 497, and even perhaps the twin dangers of the 2003 to date uptrend, currently at 446, and the 2002 to date uptrend, currently at 438. I should stress these are not targets, Not yet, just thoughts. Thoughts for another day. There are two other features I'd like to discuss. Both are potentials. The first, well, when I wrote this was a potential. The first one is still a potential, is for a potential possible bow tie formation we may recently have made in early August of the green short medium moving average, currently at 574. The medium moving average currently at 614, and the long moving average currently 611. This again is not a possible but a potential, as I'm not really happy about the crossovers. Now finally, this week's actions. When I originally wrote these notes for my commentary, they were not set up. This week's actions were not set up for a weekly key reversal. We needed a high of at least 565, which we have achieved since then. However, once we do it, we have done it, we are set up for a possible weekly key reversal for this week. And it all depends on tonight's close. And tonight will be a high close potentially in comparison to a weekly key reversal. We would need a close over 555 to make it a weekly key reversal up. And at the moment, we are looking well over that. So there is strong potential for a weekly key reversal up this week. And all the implications that may have for testing the upper side, the bright green declining short medium moving average, the red upper bear channel line, and a dark blue extension to the descending triangle. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Toftbeek and ADM Investor Service International Limited. And here comes the final important bit.